Welcome everybody, it's Jeff Beers from 40 Finance, and today I have a very interesting stock comparison for us. We've got Expedia Group versus Booking Holdings, two of the biggest internet travel companies in the world. Both of them have a number of different websites and basically compete on the same grounds, but very different fundamentals to look at, so let's jump right in. Okay, so first up is the Expedia Group, and you can see here from their websites just some of the travel properties that they own, familiar brands from the internet: Orbitz, Expedia, Hotels.com, Hotwire, Trivago, HomeAway, Travelocity. A lot of great brands in there, a lot to work with, and they generate significant income from these properties. And whether it's purchasing new sites, consolidating sites, selling sites, combining data, providing data for other travel portals and properties, Expedia Group is right in the midst of it all, and they have a lot of different revenue streams to work with. All right, looking at Expedia's stock price, at the time of this posting, we have 117.75, PE ratio of 40, forward-looking PE of 1820. If you look over the past 5 years, you can see some of the growth started in about $75, $80 5 years ago, a few ups and downs here, and eventually landing at 117. There's a lot of things at play with the fluctuation in their price. Obviously, profitability for a company like this sort of ebbs and flows with economic conditions. You have the addition of new properties. You have some spin-offs. They've taken individual sites of theirs and spun them off into separate companies. So some of it is pure results focus that brings these price swings, and then other things are macroeconomic travel conditions. But all in all, right now, Expedia is in a fairly healthy place, and the prospects for the future look pretty bright, as represented by the forward PE dropping substantially over the next 12 months. Okay, so comparing Expedia Group to Booking Holdings. In Booking Holdings, very similar business model. You can see their brands that are displayed here on their website. You got Booking.com, Kayak, Priceline, rentalcars.com, and OpenTable, which isn't necessarily travel, but it allows you to book reservations at just about every independently owned restaurant. There's also ways to get in with chains. And they also have a rewards program that's pretty popular for folks who eat out on a regular basis. Now, looking at the stock of Bookings Holdings, we start to see where the differential comes in between Expedia Group, right? First of all, the share price is $1,815 right now. That's not a mistake. And you have a PE ratio of 31 in the last 12 months and a forward-looking PE of 1794. So the PE model is very similar. I think the Expedia one was 40 in the last 12 months. Booking is at 31. And then I think both forward PEs are right about 18. The difference here with Booking is you can see in the past 5 years, you got a pretty solid trajectory of growth. Not as much fluctuation in there. I mentioned the macroeconomic factors. It could be environmental things like droughts and hurricanes and weather that would affect certain areas that you want to travel. Booking Holdings, while it has a few micro dips in there, has done pretty well to continue to build for the future. And I think the real secret that we're going to see in just a little bit with Booking as opposed to Expedia is just straight profitability. Booking is in a much more profitable stage of their business where they're just printing money at this point, where Expedia is trying, reinvesting in the company and trying to grow more. So we'll see how that stacks up here in a second. So this comparison chart here, hopefully you guys can read the numbers from MarketBeat, allows me to put two stocks right next to each other. And you see at the top here, we've got Expedia and Booking. And annual revenue, Expedia has $10 billion in annual revenue. Booking has $12.68 billion. So Yes, $2.68 billion, it's a big difference, but they're not so far off of each other, right? That basically adds up to a 26% difference in annual revenue. But as you get further and further down the line here, when we get to net income, Expedia's coming in at $378 million for the last 12 months, and Booking Holdings came in at $2.34 billion. So big difference on profitability from a net income standpoint. And I put the 6x there. Basically, Booking is doing 6x net income. When it comes to earnings per share, they're doing 21 times what Expedia is doing. Expedia at $3.72. Booking Holding at $77.03. So 21x there. And forward PE ratio, just about flat between the two. You get into net margins though, and you see the difference. You got 4% margin for Expedia, and on Booking, you're almost at 20%. So everything Booking does is inherently more profitable than everything Expedia does. That's not necessarily a signal of doom for the future of Expedia. It just means that they're investing, acquiring, and building new systems that are costing a lot of money. So obviously, when we look at the annual revenue, Expedia is not doing bad. They're bringing in $10 billion, okay? It's nothing to sneeze at, but they're just directing their income into different areas where Booking right now is at a stage in their company where they're just happy to produce the profits and they feel confident about a lot of their growth that's already built in. One last thing to point out here for all you dividend investors, Expedia does have a 1.09% dividend that on an annual basis pays $1.28. Booking Holdings has no dividend. So a little bit of a difference there, not really much when it comes to profitability for an individual investor. However, it is kind of interesting between the two companies that Booking is the one from a profitability standpoint that does not have the dividend. Okay, so looking ahead to the future, what are analysts saying about Expedia and Booking Holdings? And I take this, as I always do, from my TipRanks dashboard. This is the best performing analysts that cover the stock Expedia. And right now they have a target price on average of $144.29. You see over here that there's a high bar of 180 from an analyst and a low bar of 115. It all comes into about an average of a 22% upside over the next 12 months, which is pretty healthy. And assuming that the travel industry doesn't fall apart for whatever reason, then Expedia has a pretty nice looking trajectory for 2019. On the buy, hold, sells, you got 5 of the 7 analysts saying Expedia is a buy and 2 coming in at hold. All right, looking at the same snapshot for Booking Holdings, and you see here that you're still looking at about a 20% upside, but the price target for an $1,800 stock gets a lot bigger, right? So it's $21.83, but it's just around the same sort of upside projection. The high analyst had a $2,500 target, you get the average, and then the low ball was coming in at $1,750, which is actually a regression. I think it's an important consideration that from a straight capital gains perspective over the next 1 year, you would really essentially make the same money between both stocks if you invested the same amount in both, right? So with the 20%. So you're going to have to dig deep on these stocks if you're choosing between one or the other to really get a feel for who do I want to invest in, which model do I like best, or you can buy both and bank on the travel industry as a whole. Looking at the buy, sell, holds, you got 14 buys and 9 holds for Booking Holdings. They have more coverage from an analyst perspective at this point, at least in TipRanks, so that's why there's more votes, so to speak. But overall, there's a lot of comparables here. A lot of comparables, and it just depends on the fundamentals that are most important to you. Okay, so the bottom line, at least from my perspective, you got Booking Holdings as the profit juggernaut between the two. Doesn't mean that Expedia is doing necessarily anything wrong, but if you're going to focus on profits, Booking Holdings wins pretty much hands down. Expedia is more focused on reinvesting for more growth. Both of them can obviously acquire more sites. Both of them can invest in advertising, technology, etc. And in my opinion, and this is point number 3, capitalizing on market changes, which I put alternative lodging, partnerships, and mobile technology, is really the battleground. And it's not going to be settled in 2019, but over the next 2 to 3 years, they could stay neck and neck with each other. I wouldn't be surprised if I saw someone get ahead too. I wouldn't be surprised if Expedia, from a revenue standpoint, made some plays over the next 3 to 5 years and they pulled ahead, okay? And the reason being is there's a lot in the travel industry that's changing, right? So you have the concept of the Airbnb, or they call that alternative lodging. You have, getting away from Marriott and places like that and actually booking a beach house with an individual property owner. That's becoming a reality, and Booking Holdings in particular has already started to invest in this area. And I know Expedia has an app that allows you to connect to homeowners as well. So they're both playing the card. Who will play it better and how far does alternative lodging grow will say a lot about the future of both of these companies. In the partnership area, I think Expedia has the strength here. So they have done a really good job of making almost like a data division where they're taking all the data that powers their websites as far as hotel prices, availability, things of that nature, and they're selling that data or partnering with companies like credit card, rewards portals, etc., to get a play in those markets. So it's a pretty smart move, in my opinion. We'll see how much that data group returns over time, but getting exposure in more places is always one of the easiest ways to grow profits. Number 4, which I called out earlier on this list, travel will always be sensitive to economic conditions. So follow these stocks closely and look for buy low opportunities. I think that we'll see several throughout the year where these stocks drop, not because they're not good companies, but there will be some sort of disruption in the travel market. It could be a recession from a spend perspective. It could be a terrorism threat, right? It could be hurricanes, you name it, whatever would disrupt the standard pattern of vacationing for both America and abroad. You have the potential for these companies to lose a lot of anticipated revenue, and probably more than that, analysts get down in the weeds so hard on this stuff and they just start crying wolf early that, hey, Hurricane X is hitting Florida, we expect Expedia will lose X amount of dollars, and all of a sudden the stock will tank, which is a buying opportunity for you because we know that pattern is temporary, right? Or at least, in the example of a hurricane, it is temporary. We know it affects things in the short term, but the long term requires a much more scientific look. So if you see Expedia or Booking Holdings going down and it's because of a short-term threat, then you might consider buying at that if you believe that threat will pass over the long term. As far as my investments, I put a note here that Expedia is covered with my FDN ETF, where it has a decent amount of exposure in there. I'll link to my FDN ETF review below. But basically, I'm happy with my Expedia coverage within that ETF, and that particular ETF I plan to expand my position in throughout the year. So I'm glad I have exposure to at least one of these companies. And I guess just as a general opinion, both stocks look like good buys for the long term, in my opinion. The PE ratios are great. The billions of dollars of income is coming in. Both of them are looking ahead to the future. Neither one is satisfied. They're trying to grow their revenue. I don't see travel as an industry that's going to be taken away from us anytime soon. So my advice to anyone considering these two companies is to dig in deep and just figure out which of the brands do you like better. You know, when you go through the quarterly report and you hear them talking about their initiatives, which initiatives align with your interests better? I don't think you can go horribly wrong with either one, but you should do your research to make sure you find the one that best suits your investing style. All right, guys, hope you enjoyed this. My name's Jeff Beers. This is the 40 Finance channel. Please like and share these videos if you want to see more content like this, and I'll see you on the next video.